Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is a mini S&P 500 futures contract, front month in nature. Looking at the March contract, last print 1450, up 30 points on the day. This is the first full trading day of the year 2013. Whoa and behold, it has the bulls overcome the we'll say artificial media hype of the so-called alleged fiscal cliff that was certainly really not an issue. Again, we'll be media hyped, I'm sure, at the rise of the debt ceiling. Again, so the market might sell off. Nevertheless, we did expect to be at 1460 over the next week or so, and it looks like that's going to come to fruition. We'll probably go ahead and target 1460. Nevertheless, we have closed out some bullish exposure that we have, taking advantage of taking some profits off the table, taking some exposure off the table on our swings. We'll look at that in a second. Handsome gains we've had, in particular the Valerius, which was long, considerably long overnight, and actually long the prior day, essentially making up some gains. But we did average down our exposure. And generally that's not a very good term, but we did reduce. We trade many trading models, elite trading models, as you guys know. Some will go long, some may go long in the upside, others may go long in the middle, and we'll have others that might go long at the bottom. That's why you really want to have non-correlated trading models. Again, of course, non-optimized, but non-correlated trading models that'll really soften your kind of blows. And we'll actually look in a second at Valerius, which has been tracked in third party for about maybe a year, not really a year and a half, a little over a year actually. 80% annualized return against just a maximum drawdown of 20%. That's in futures. What we do is risk speculation. A lot of you guys have followed this video, certainly are aware. What we do is risk speculation. So if risk capital is all you need to be putting with us, if you have $1,000,000, let's say you just have $100,000, you only want to put $10,000 to $20,000 of your total portfolio in. What we do is risk speculation. We're probably going to make you 100% on your money, but you might lose. In fact, well, you're going to lose 20%. In fact, we'll look at third-party tracking in a second of Valerius. Maximum drawdown 20%, and the portfolio has made 80% per year. It's actually made 100% over the last 15 months or so. So you're going to make 80% against a risk of just 20%. Having said that, that is Valerius. It trades some of our best trading models. In general, you might not be limited to that. You may trade the MSAUDT, for instance, which will have drawdowns can be 100%. Nevertheless, you might make 100 to 200%. In fact, the annualized return on the MSAUDT is 400%. We'll talk more about that in a second. Nevertheless, from a daily perspective, we'll look at some quick daily analytics here. We are fully bullish, as you can see. We went bullish back in July. It's been kind of waxing and waning a little bit through the fall. Here we are at the highs, have maintained official market timing bullishness. As you can see, 20, 30, 50 adds up to 100% bullishness. We did have this negative momentum divergence, which worked itself out. We now should get another swing to the upside to test 15 here. From a directional movement perspective, you can see that we've had a convergence, so that's arguably essentially neutral. Shouldn't read intermediate term bullish because that's rolling over. This is intermediate term neutral, as well as short term, we'll call it gray status bullish because, or sorry, bearish, because we are simply getting a retest here. But nevertheless, given the market wild swings, you can see that this indicator might not be the best indication, which obviously should be taken in concert with all the indications that we use, including price technical, which is suggesting above 1440. The market is certainly in favor of the bulls. So it's certainly looking great for all you guys out there. Certainly most of you are long the market in the other 50% of your portfolios, or the 50% of your portfolios that arguably aren't in bonds, but you're long, so that's great. And it's always great when the market's up. Again, retesting highs. We expected 1460. Didn't expect it in 2 days, particularly when we were down here around 1385 on that incredible sell-off in the future, certainly more so than the cash market. So 1400 is a very pivotal level. We've definitely bounced from that. We're going to go ahead and look at over at the sentiment perspective. Kind of a mixed picture. We're right in the sweet spot essentially of the sentiment picture, suggesting the market could certainly move higher. Once we get down to a level of 40, we would expect the market might not be able to, sustain But right here, reading a 7.4. You're looking to potential, certainly a lot more buyers on the sidelines that can get along this market. And as you can see, breaking out nicely to the new highs are the small caps. The mini Russell 2000. You see the VIX got crushed. I would hate to have been a put owner here. You're going to get whammed on Friday, and you're going to get all your erosion from the volatility of the VIX dropping. So that would have been nasty to own some puts. But we trade futures, so we don't have to worry about primarily futures. We also trade OX options as a complement to our futures clients. Nevertheless, primarily we don't really have to worry about too much premium decay. And so we're going to go ahead and look at this is actually a free system that we've mentioned. There's short right there, just a quick little short and right back out. So you can trade this system for free. If you're interested, shoot an email to admin@MiniAnalyst.com. There's a quick look at MRSEM. We'll pull that up and we'll see how that's doing. Not too bad. Beautiful. This is the time you want to get involved, folks. As a matter of fact, this is a closed trade. You can see MRCM was long 1,007-ish or so, so $3,000 a contract, couple of days. So this will actually be right up here to around 95. It's at 90,000 now. Beautiful time to get involved there. MIL-TF, we'll see how that's looking. Not too good. MIL-TF, not too good. Well, actually, not too bad. You definitely want to get involved right here in the MIL-TF. We'll take a look at Day Trader 16. Now, these are certainly not Tier 1 trading models. These are not our reserve trading models. These are general models. And there's another beautiful opportunity to get involved in Day Trader 16. We're going to go ahead and close this. We'll minimize this and take a quick look at... Let's take a look at the intraday, actually, which will be right here. Quick look at the intraday market. As you can see, beautiful green. These are intraday dynamics, how we gauge the market. As you can see on this Wednesday, first day of the year, we actually had the big move was late Monday, actually midday Monday, and as you can see, we were already bullish, but it wasn't particularly impressive. And then wham, midday Monday, accelerating bullishness, above the trend, breaking out to new highs. This, folks, was a fantastic buying opportunity, 1405. Obviously, you can see accelerating bullishness and even more accelerating bullishness as we go into today. So longs, count your profits. They are racking up. It is a great time to be bullish on the market and to be long the market. And as you can see, the intraday dynamics, certainly for a free informational day trade, go ahead and go long 1450, stop 1444 is the stop, and we might hit 1460 by the time the day's out. Swing traders, you can go ahead and buy as well. Target 1460. Again, kind of a similar scenario. Go ahead and stop it. We will eventually fill this gap in all likelihood, unless the market is extremely bullish. But in all likelihood, we will fill this gap from 1425 or 30 to 1440, but right now it is all bullish, and as you can see, that would be a 5-star trade. The actual trade would come in if we'd have been here an hour ago. Once we see this red converging with the trend, so right around 1445 is the actual trade setup you want to have in a scenario like this. We're going to go ahead and minimize that and see where that brings us. That brings us back to the EVO, the venerable EVO. We'll take a look at the performance graph there. It went long this morning. Beautiful long the day prior, and as you can see, another long today. Quick $500 per contract. The Evo TF, the active version, that should obviously be trading. Oh, traded even earlier on Monday. So a beautiful setup for the Evo active, Evo TF active, Evo EM active. Not really trading. Matter of fact, had a stop loss. The Evo one lot trades the ES, again goes long midday right at new equity highs, also long again today. What a beautiful cup and reverse handle pattern. That is impressive. Evo Day Trader 1.0 MCM, as you can see, buying about 6 contracts, nailing the end of the session, and actually exiting earlier today. Beautiful trading we'll see there. And we'll take a look at the EMD System 1.0. Goes long at 1,007. It's catching quite a bid here. It's kind of a wild move, but when it hits, you'll get $40,000 easy. $40,000. I'm sorry, yeah, $40,000. $40,000. So anytime this system hits, you're going to get $40,000 Aussie. As you can see, a green dot. And there you go. We'll take a look at this. Trades the, I believe, the yen, Aussie yen, going along nicely. So we're going to go ahead and minimize that and take a look at some of the reserve models. And as you can see, EMDS going long around 1010 here, catching the move up. A little bit of a wane here. This should obviously be about another 3,000. So again, 90 up to 95. R60F going long. Not too good of a fill today. Kind of flat. Went long on the high side. EVR3 filter, green dot, EVR3 TSR, green dot, beautiful. EVR3 AC TSR, green dot. EVR3 VSR, ooh, just went long. Just went long midday today. Not quite a green dot. MRSE PTL, again catching that long side. So this will be about another $3,000. That's a lot of $100,000. Okay, and switching over and looking at some of our specials, what we're doing is we've actually extended. I know a lot of you guys had tried to get into to the special, weren't able to get into the special that we have due to the holidays. Usually it ends on 12/31 at midnight. We've actually held a couple of times we've done this. We've actually extended it over until I believe it's the 4th or the 3rd. So I believe it will just go ahead and count on the 3rd extended, so at midnight. So it'll be extended today, essentially. I'm not sure if it'll be extended through tomorrow. It might be. We'll have to check. But it should be extended through midnight if you guys are interested in taking advantage of that special offer. Let's take a quick look at the MSAUDT. We'll see how it's performed. As you can see, today is, of course, January the 2nd, 2013. Monday. Yesterday was New Year's Day. Monday, beautiful day for MSAUDT. Put up another $2,500 or so. Actually, that's $2,700, as you can see for the MSAUDT. And what that did was that put it over the 100% mark for the MSAUDT. It's a $10,000 portfolio. This is third-party tracking. As you can see, the annualized compounded return is 414%. This trades 6 non-correlated trading models. It's been tracked for about 7 months, since July. There you can see earlier iteration or earlier snapshot, if you will, $18,489, and that was in early December. You can see it was up 2.9%, and now we don't have the monthly tabular, but you can see the total system equity now is at 23,147, or about $5,000 more than it was at early December. And that, of course, gives you the, wish we had the monthly tabular here, that gives you the 130% return in just 7 months, which, of course, gives you an annualized compounded return of 414%. Maximum drawdown, you can see 30%. That's not very bad. Valerius was 20%. The maximum historical drawdown while we've been making an annualized 414% is 31% for the MSAUDT. We actually have introduced the MADISC that was just recently launched. That has a ridiculous compound annual return. What this seeks to do is just essentially trade the best opportunities to trade. And as you can see, the track record speaks for itself. The LIBOR, you can take those two out. That was a symbol error, $12 and $6, so $18. So the actual number of profitable is higher. The percentage profitable is higher. As you can see, the maximum drawdown has only been 3%. Again, this seeks to take the $1,700 gain, $200 loss, $700 gain, $200 loss, $200 $50 loss, $1,100 gain, $900 gain, $600 gain, $400 gain, $500 gain, $500 gain, $700 loss, $1,100 gain. That leads to, as you can see, there's the equity curve, 67% in the first 6 weeks. Ridiculously, this is a great portfolio, folks. $300 a month, as you can see. And you can actually participate in that for the yearly special. We mentioned Valerius. There you can see Valerius closing out. There's the monthly tabular. About $100,000 is the system equity. Began tracking with $50,000 essentially in November. That really was like October 31st it began. So November, so 12, 13, 14. 14 months essentially, and we've just booked some gains that were actually booked on the 31st that rolled over into January. So December was actually a pretty nice month. January has been, based on this, an outstanding month. 26% return, $5,000 gain. When you see this by 9 TFs, this portfolio is a $50,000 portfolio. You could buy 9 TFs, but that's a bit of a misnomer. That's, again, we trade mini systems, so the long side, I think the swing was the most that we had in the TF was 2. So we had long 2 TFs, but then during the day, another 7 were purchased on the 31st. So you get a $4,000 gain. That includes the swing. So when you see these large numbers, you can see the average exposure. There's another one, 6. The average exposure is about 1 to 3 contracts. On the swing side, against $50,000 portfolio, and you have, there you see, 20% maximum drawdown, 80% annualized return since being tracked for about a year. So not too bad reward to risk. Nevertheless, all you need to do is go ahead and we'll say you're interested in the new DISC, which seeks to trade only the best opportunities. Go ahead and add to cart, and well, let's just add it to the cart. There we go. And we'll see, you put in 12 months, and what you're going to do is it's going to be $3,600. It's just $300 a month. It's already made, well, let's see what it's made. 6,650. So it's made $6,655 in 6 weeks. Our fee to trade is $300. Quick math serves as, that's a great deal, folks. Double my money. There you go, right there. Recalculate, because we've got 12 months instead of $3,600, $1,800, an entire year of auto trading with full automation. This portfolio, or the MSCUDT, or any other ones you see up here, the Valerius, you can save as well. Instead of $4,800, just $2,400 for the entire year, and you see the money. So $2,400 basically our fee, and you make $48,663 essentially. Not too bad a deal, as you can see. So if you guys have any questions, go to the website, chat with the support team live. Shoot us an email to admin@MiniAnalyst.com. Hope you guys are having a great new year, and it's going to be a fantastic 2013. We will see you next time.